What should we read into these stronger than expected numbers?
I think the data is actually quite good. Clearly, it shows a very strong consumer sector. Retail sales growing by 10.7% is really a good number. Some people have been a little bit disappointed by the industrial aspect of the numbers. I think it will take time to feed through. We think that going forward we are positive on China. We think that GDP growth in China in 2023 should exceed the government target. We expect something like 5.5% versus the 5% government target. And we think that it should start to feed into the earnings of the Chinese corporates that we will see starting mid-May. So we are positive on the Chinese equity market. We have a preference for the A shares over the H shares or the one quoted on the Nasdaq.
Within the Chinese equity market, which sectors do you see outperforming this year?
So we see all the sectors related to the Chinese consumer outperform. So we like consumer staples, consumer discretionary, but we also like the healthcare sector because, as you know, there is an issue about aging population in China. So the healthcare spending are going to grow structurally in China for the next 10 or 20 years.
Do you have concerns that the regulatory environment could prove a headwind for any of these sectors?
Not really. I mean, it has been a headwind in the past for the real estate sector, or it has been also a headwind for the technology sector. But I think the Chinese authorities are very much concerned about growth. They have their legitimacy due to the fact that their country has been growing faster than the rest of the world for the last 20 years. So they understand the negative impact that those measures have on growth. And I think they will refrain, at least in the short run, to impose stricter measures.
Okay, so it sounds like your preferred way to play China is through the Chinese equity market. To what extent could the China growth story, if it continues to surprise positively, as you just suggested, buoy sentiment and earnings in Europe? To what extent could it drive further upside in European equities?
I think the only good news for European equities from those China numbers comes from inflation. Inflation number was very low in China in those numbers, 0.7%. I don't know if you remember, but some people were worried that the opening of China will create inflation and will have a negative impact on Europe and the US, and it doesn't seem to be the case. So in that sense, those numbers are positive for the European stocks, and as you see this morning, they are reactively, moderately, positively to those numbers.